Hey everyone, welcome back to Corporate Decoder, the place where we make sense of complicated business reports. Today we're diving into a report from Abivax S.A, a French biotech company. Get ready for some twists and turns because this report has both good news and some not so good news that might make you raise an eyebrow or two. This report is important because it gives us a snapshot of how Abivax is doing financially and what challenges they're facing as they try to bring new medicines to market. They are focused on chronic inflammatory diseases, which affect a lot of people, so this matters. If you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so join the conversation there for even more insights. This is a Form 6K filing, which is basically a quick update that foreign companies listed on US stock exchanges have to file. This one is for June 2025, giving us a look at Abivax's financial results for the 3 months ending in March. Let's see what we can dig up. Abivax is a company trying to develop new drugs. Their main focus is on a drug called Abivax, currently being tested for ulcerative colitis, Crohn's disease, and even as part of combination therapies for inflammatory bowel diseases. First piece of good news is that their clinical trials for ulcerative colitis have enrolled all the patients they need. This is a big step forward. They expect to have some early results from these trials in the third quarter of 2025, so keep an eye out for that. We should get some top-line results soon. In the meantime, a phase 2 clinical trial for Crohn's disease has enrolled its first patient. The expectation is that we get data from these trials in the second half of 2026. A lot of waiting for this report. Also, early testing suggests Abivax might work even better when combined with another drug, etrasimod, with signs of synergistic effects, which means the combination could be greater than the sum of its parts. That's exciting, and they're looking for other drug combinations and treatments throughout 2025. Us saying so, clinical news aside, let's see how their financials are shaping up. Okay, here's where things get a little more complicated, but stick with me. This table summarizes Abivax's financial performance. For the 3 months ended March 31, 2043 million euros. Now that's quite a bit higher than the approximately 43 million euros. Now that's quite a bit higher than the approximately 43 million euros. Now that's quite a bit higher than the approximately 43 million euros. Now that's quite a bit higher than the approximately 43 million euro loss they reported for the same period last year. That is about a 22% jump in losses, not something you want to see. Their total operating income also dropped by about 16%, going from 1.2 million euros to about 1 million euros. That shows that they're bringing in less money overall. What's contributing to those losses? Well, their research and development expenses, the money they spend on developing new drugs, went up by 10%. That's not necessarily a bad thing because you need to spend money to make money, but they weren't bringing in more cash, so the impact of those expenses really hurt them this period. On a more positive note, their sales and marketing expenses decreased by 57%. This may be a reflection of the fact they don't have anything to sell right now. Also, their financial expenses jumped by nearly 60%. Digging in a bit, a lot of that comes from interest expenses from loans they've taken out and non-cash expenses from some certificates they've issued. They also had some losses due to changes in currency values. That's called foreign exchange. All that adds up. Basically, they're paying more to borrow money and experiencing some paper losses from changes in the market. Now, for the part that could make you raise your eyebrows, because of these losses and with their main drug still in development, there's what is called a material uncertainty about their ability to continue as a going concern. In plain English, that means there's next 12 months, it's basically a warning flag. To that end, they expect to be able to fund operations through the fourth quarter of 2025, but not beyond. And to do that, they'll have to either get additional financing such as public or private equity, or out-licensing some drugs, or find some other solutions. They do have a way to issue and sell some shares on the market to raise money, up to $150 million worth, but they haven't used that yet. So they're hoping to get back some money they've already spent through research tax credits sometime in the second half of 2025. It's die Genbacknesgentov. What does that mean in practice? Some projects with a French investment bank were cancelled in June 2024 due to technical failure. The company had to reimburse some costs, but they also were relieved of paying some of the conditional advances that they had received. They have a debt of around 333 million euros, consisting of loans and commitments to purchase. That's not an insignificant amount. As of March, just over 39 million of that has to be paid in under a year, while 70 million is due after that. The remainder of the total amount at 220 million euros is related to off-balance sheet obligations. For the 3 months ended March 31, 2025, cash used in operating activities was 33 million, compared to 34 million for the same period last year. That means they are burning money at roughly the same rate as before. Their cash and cash equivalents, which is their total liquid savings at the end of the period, was roughly 103 million euros. Down from about 144 million at the start of the period. That paints a picture of a company spending its savings to keep the lights on. In the period prior to the filing between February and December 2024, there were a lot of changes to the management team, indicating potential organizational or strategic shifts. The CFO also left the team a critical role. Throughout 2024 and early 2025, Abivax issued multiple compensation plans, including free shares and share warrants to its board members, officers, and employees. I can see that they are trying to retain top talent. In terms of accounting standards, they have updated to the latest international guidelines. The company has assessed and concluded that impacts are not material. This implies they are compliant in that field and doing the bare minimum TORFED. So what's the takeaway here? Abivax is in a tough spot. They have some promising clinical trial developments, but their financial situation is shaky. They're losing money, their expenses are up, and they need to find more funding to keep going. These circumstances can place significant risk on shareholders and the company's capacity to operate. Their ability to get funding or successful drug trials might not materialize when expected. The company must now focus on effective spending. Make sure they are being efficient and also try to find cost-saving opportunities. Alright, that's our breakdown of Abivax's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description, and thanks for watching. See you next time.